right, all right. How you guys doing? Happy Monday. Welcome back to This Week in Money. I'm your host, Jose Gonzalez, aka Mr. Wealth Mindset. And tonight we're gonna have a fun little conversation about what is a better investment strategy. What's a better investment strategy? Cryptocurrencies, Bitcoin, digital currencies, or precious metals, specifically gold and silver. Now, I happen to have a lot of friends, professional colleagues who are big crypto enthusiasts, and I'm hoping to have one of them on this show soon so we can dive deeper into this, right? I myself am not a big crypto enthusiast, and I'm going to get into the why and how of that in just a bit. But I would love to know, what are your thoughts if you're someone who either owns or possess or invest in crypto? What are your thoughts about crypto? As well as, where do you see it going long term? Do you think it's a good investment or not? And then I have that same question and topic of conversation when it comes to precious metals, gold and silver. So a lot of people don't know a lot about, gold and silver. I mean, of course, they know what gold and silver is. They've heard of gold and silver, but they don't know a lot about it as an investment strategy, right? And recently, with everything that's happening in the economy, with the U.S. dollar losing massive value, with the inflation, hyperinflation, recession, potential recession, all of the things that are going on, not only over the last 5, 10, 15, 20 years, but a lot of the things that if you've been watching This Week in Money on a weekly basis, you've heard me kind of touch on and predict, at least from my standpoint. And these are not just my own predictions. Yes, they are. I own them. I believe them to be true, but a lot of other people who I follow in the global macroeconomics community, like Robert Kiyosaki, Peter Schiff, some of the names escape me, but on and on and on. A lot of these people, have the same suspicions that I have about what's happening in the economy, what's coming down the pike. Whether we're heading into a recession, depression, whether there's more inflation. So again, if you haven't been watching This Week in Money, go back and check out the previous episodes. We've talked about, what is money, the history of money, as well as currencies. We took a deep dive into that. We've talked about last week. We talked about, what did we talk about last week? I think I can't remember. We've touched on so many topics. Thank you, my love. Best. Love you. What did I talk about last week, baby? All right. Well, either way, that's what we talk about. We talk about money here. We talk about what's happening in the market. We talk about, sound investment strategies. And this is a community. So I encourage you guys to participate, to comment, let me know your thoughts. So we're going to dive into it. We're going to dive into the conversation of crypto versus gold and silver. Okay. I'm going to give you my thoughts on what I think makes a sound investment strategy, and at least from my perspective, things that you should be aware of, cognizant of, or maybe do your own homework and research. Okay, I'm not here to to give financial advice. I'm not here to make conclusions as to what you should do with your money or investments. I mean, any good investor, any good financial planner or financial advisor is going to start the conversation with you regarding your investment strategy, all based around your risk tolerance, right? And that's the main thing that drives investment strategy is your specific risk tolerance. And so, my opinions on these different things, on crypto and digital currencies, on precious metals, on anything in the market, real estate, stocks, or whatever, is like any investor, it's going to be based on your risk tolerance. So what I encourage people to do is to do their homework, to research, to learn as much as possible, because at the end of the day, money is a game, right? It's a game. You need to understand the rules, and you need to understand what's the potential Oh, yes. Thank you, baby. Last week we spoke about inflation. Thank you, my love. So yeah, and it's kind of relevant, right? Because one of the things that people can do to protect themselves against inflation is to invest. Okay, is to invest. All right. Now, let's get into it. Let's talk about real quick crypto versus gold and silver. What's a better investment? What should you be considering, be aware of when it comes to using these tools, these financial instruments to for your investment portfolio. So for those that don't know, that haven't, I don't know, maybe you've been living on another planet and have not heard of Bitcoin, have not heard of cryptocurrencies. These came on the market about 12, 13 years ago, was the onset of digital currencies, right? And like anything that's new, in the very beginning, it was valued very, very cheap. Okay. And to kind of put it in layman's terms, because, crypto enthusiasts can wax poetic on the intricacy of how, crypto is actually generated in a mine. To put it in layman's terms, it's kind of like, you pay your money, that money then gets applied into kind of like a computer program on the blockchain. It uses blockchain technology, and it creates kind of like an energy by which this, and again, I'm just using general terms. I'm not trying to geek out on crypto, or pretend that I know everything about it, but I'm just kind of break down the overarching theme of what it is and how it works. But essentially, it's a digital currency. Okay, so when you're buying, be it Bitcoin, be it whatever it is that you're buying, what's happening is that that money is going to whatever company, whatever exchange. They are then using some type of computer program, energy or whatever, to mine this digital coin. Okay, so and it's become increasingly popular investment option in recent years. Like I said, it's been around now for about 12 years. Bitcoin and other cryptocurrencies are often compared to traditional investment options such as gold and silver. Okay, but they're and this is what I'm going to talk about now. To me, they're completely different. Not only are they completely different, but to me, they're actually polar opposites. Okay, and I'll tell you what I mean. So, the concept of cryptocurrency was actually first introduced in 2008 with the release of Bitcoin, right? So 15 years ago. Since then, many other cryptocurrencies have been developed, each with its own unique features and characteristics. These digital currencies are decentralized, right? So they're not controlled by any central government. The banking system is not privy, and that to me is a good thing. All right. So I just want to just throw in this caveat and say I'm not against digital currencies, but I'm not a crypto enthusiast, and I'm going to tell you why here in a second. So they're decentralized, meaning that they're not backed by a central authority or government, and transactions are recorded on a blockchain network. This has allowed for faster, more secure transactions than traditional financial systems. Okay. Now the question is crypto money, and how's its value determined? So this gets into why I am personally not a crypto enthusiast. Okay, now if you're into crypto or not into crypto, comment below. Let me know what side of the seesaw you're bouncing on. What are your thoughts on it? Tell me. A lot of people like it. I have a lot of friends that have actually made a lot of money in crypto and have also lost a lot of money in crypto, right? But let me know what side of the seesaw you're on. What you like about it, what you don't like about it. And I'd love to know your thoughts. So one of the main debates surrounding cryptocurrency is whether it should actually be considered money. Okay, while they are not widely accepted as a form of payment, many people are starting to use them for transactions. The value of cryptocurrencies is determined by market demand and supply, with fluctuations based on factors such as investor sentiment, adoption rates, and regulatory changes. Okay, so it's my stance, and again, a lot of the people that are in the community that I subscribes to will say that crypto is not money. Okay, it is not money. And the reason for that is that money, if you haven't seen the first the first episode that we did of This Week in Money, we talk about what is money. Okay, now historically, many things have been used as money: livestock, coffee, tea, you know, salt, spices, um, gold, and silver. Okay, because money, there's a few things that actually defines money. Number one, money is a unit of measure. Okay, meaning that you can actually m- give it some type of measure to quantify its value. Okay. um so for example, if you're using salt as money, you can give a value to a pint of salt, right? Or a pound of salt, right? You can give a value to that. You can ascribe that value to it, and you can say a pound of salt is worth this. Or if you have livestock, you can say a calf, a goat, a pig, right? Or 10 chickens is worth this. It's a unit of measure. Okay. And so using that unit of measure, you can use that to barter, right? Because you can say, hey, my 10 chickens is equal to 50 pounds of salt, right? And so you can exchange with it. It's also something that's accepted as having value, that's universally accepted as having value, and can be used as a medium of exchange. Okay, because guess what? You might say, how is salt and spices money? Well, people use salt, they use spices, right? This is why a long time ago, when Marco Polo was discovering the New World, or however that story actually goes, and he was coming up with these spices and salt, right, and then bringing them back to countries that didn't have it, where they used to have bland food. Let me tell you something: if you ever had a piece of steak or a piece of fish or some food and it had no salt, it's distinctly different than something that's actually seasoned. Now, maybe if you've never had seasoning, you wouldn't know the difference. But once you have seasoning, okay, it can be hard to go back to unseasoned food, right? It's one of the reasons that people hate hospital food, because it's generally bland and it lacks seasoning. So anything that has a demand that people will accept as a form of exchange, because they ascribe some type of value to it. So if I have salt and you don't have any salt, but you have chickens, guess what? We can barter, right? I can give you salt, you can give me chickens. Now I have food and you're able to season your food. Okay? So it's a medium of exchange. All right? So money, it's a unit of measure, it's a medium of exchange, and then lastly, it's a store of value. And what that means basically, whether it's a short store or a long store, okay, and there's differences to that, but basically what that means is that it holds its value over time. Okay, it holds its value over time. You see, in my example, of the chickens, right? If you're used to, if people will always need food. So, while perhaps the prices of a chicken, right, and you generally before something can be considered money, it has to actually be a commodity, right? A physical, tangible thing that can be traded, bartered with, used as money, used as something that has a store of value. So by being a store of value, it means that if a chicken costs $10 right now for a whole chicken, let's just say, it means that perhaps certain factors in the economy, in the world, in the chicken market can cause the price to go up and down, but it's probably not going to happen ever where chicken is just $0, where it has no value. Okay, so over time it keeps its value, it's still worth something. So these are the reasons, right, that I am not personally a crypto enthusiast, because crypto doesn't have any of these properties. Okay, crypto doesn't have any of these properties. It's not a commodity, it's not something that's tangible, it's digital. Okay, It's not actually tangible. It's not, it's not a store of value, because if you study what's happening in the crypto market, yes, people that came in early, bought Bitcoin, bought these other different kind of coins, they paid a little bit for it, and it ballooned, right? It was upwards of like $60,000, $69,000 for a Bitcoin. But guess what? 2022 was a rude awakening for cryptocurrencies. Or Bitcoin, I think right now is around $19,000, right? It's less than $20,000 for one Bitcoin. Now, the thing about it is that, as I mentioned, its value is based on market demand. It's based on factors such as investor sentiment, adoption rates, and regulatory changes. Okay, so you can't predict what's going to happen with it. It's extremely, extremely volatile. All right, and that's why it's a currency. You see, it's cryptocurrency. Okay, it's not money. All right, we talked about this before, the difference between money and currency. And if you're not familiar with the difference between money and currency, I encourage you to watch previous episodes of This Week in Money, or to Google it, look it up, read on it, chat GPT on it, whatever. Okay, because there's a difference. Crypto is a currency, meaning that it's meant to represent money, but it actually isn't money. Okay, now the main advantage, some would say, of owning or investing in crypto is the potential for higher returns. And we have seen this, right? For people that were in crypto when it first started in 2008, right, and bought it for pennies or dollars, and then saw their Bitcoin go up to 60 something $1,000, that's a huge return. All right, there's a lot of people that in the last 5-10 years became millionaires, okay, in a short amount of time by investing in crypto. However, as I mentioned, this is accompanied by high volatility and risk. There's also concerns about security and regulatory issues surrounding cryptocurrency, because this is a very new technology. So there have been, not every coin on the crypto market is designed the same, has the same security measures. Some of them are kind of centralized and regulated, so it's a huge rabbit hole. If you're interested in more, I encourage you to really, really do your research. But as I said, personally, I'm not a big crypto enthusiast because it's not money. Okay, it's not money. It's extremely volatile. And yes, sure, there's a chance that it can go up and you can make a lot of money fast, but that's all based on speculation. Okay, that's all based on speculation. All right. Now, on the other side, you have what I love. And again, I'm biased. Okay, I'm biased. But again, I'm interested in knowing your comments and thoughts, where you stand, on this debate. Are you a crypto enthusiast? Are you a precious metal enthusiast? Or do you hate both? Okay, I would love to know why. Now, gold and silver has been used as money, has been used as currency, as a store of value for thousands of years. Okay, this hasn't been around for 15 years. Gold and silver is not new. And there's reasons why it's money. All right, not only does gold and silver have properties that make it to where you can't duplicate it. All right. So, one quick thing that I want to say is that I think there's something that the crypto industry does that I do not like. And it's the terminology that they use. Okay. There's the terminology. So, the first cryptocurrency that came on the market was Bitcoin. And just hearing the word Bitcoin, it suggests to you that it's a coin, same as a quarter, right? Same as a 1 ounce silver coin or whatever. But it's not. It's not tangible. It's not a commodity. It's a digital value. The other thing that they use, the other verbiage that they use that I don't necessarily care for, because I think that it's misleading and disingenuous, is that they talk about the creation of cryptocurrencies as mining. but you're not actually mining. You're not excavating. You don't have people working, going under the earth, finding a natural resource, and then that resource not only having a price based on its value on what's called spot price, which is the price, for something anywhere in the world. But then there's also the premium value, because if you get gold, like if you look up the spot price of gold or silver, that's the price. That's the price of gold anywhere in the world at the same at a certain specific time. That's spot. But you never buy gold at spot, okay? Because that's just saying, hey, an ounce of gold is worth, $10, right? That's the spot price. But someone has to actually mine that gold, find that gold. You have to pay those workers. You have to refine it, right? You have to excavate it. You have to turn it into a coin. You have to turn it into jewelry. You have to turn it into something. So there's actually a premium. There's a premium that you pay whenever you're buying a precious metal, right? You're never gonna really get it at spot price, okay? Because there's a premium to actually mining it. So crypto, they use the word mining crypto, but there's no mining happening. It's computers that are working, that are exchanging information, exchanging energy, whatever it is, and creating digitally, virtually, these quote unquote coins, which aren't really coins. Okay. You can't touch, you can't feel, you can't hold a Bitcoin. Okay. So I just think that that's something that's a little bit, I just wanted to point that out because I feel like it's a little bit disingenuous. But I think it's intentional. They're trying to create this picture in your mind. Oh, we're mining Bitcoin. We're mining cryptocurrencies. All right. When in fact, they're not mining anything. All right. They're not mining anything. It's kind of like, if you play a video game and you're playing a video game where you're racing cars, okay, and in the rate and in the video game you crash, all right. Guess what? There's no accident. No one got hurt. There's no damages. There won't be any insurance claim. There was no real accident. You just crashed in this digital virtual video game that you're playing, right? If you crashed in a video game, you wouldn't go to the hospital, okay? You wouldn't have to use the insurance, for your vehicle, because it's pretend, okay? You're just pretending like, oh, I crashed, I died. Well, obviously you didn't really die. You didn't really crash. So that to me is the same thing with crypto, okay? Where it's not, there's no mining happening, there's no coins, okay? It's all pretend. So getting back to gold and silver. Okay, so gold and silver has been around since, we actually call it, many of us, Robert Kiyosaki, my business partners, a lot of people call it God's money. Why? Because it's been here since the beginning of time. It's a natural resource. All right, it's a natural resource. All right, you can't produce it. The Fed can't print it up. All right, you actually have to mine it, really mine it. Okay, it has to be found, it has to be excavated, it has to be processed. All right. They were first used as currency. Gold and silver were first used as currency in forms of coins in ancient Egypt and have been continued to be used throughout history. In addition to being used as currency, gold and silver also have industrial purposes. All right. Properties that make gold and silver valuable, right? Let's talk about that. So they possess several properties that make them valuable both as money and industrially. They're durable, they're divisible, and they have a relatively stable value. Okay. Additionally, they're scarce resources, making them high valued and sought after. So, some people will, like, recently I was talking to a gentleman. I think gold is around 2000, 2100 right now an ounce. But a few months ago, I was talking to a gentleman about gold. And he said to me, oh, well, you know what? I know all about gold. I was around in 71. He's an older gentleman, obviously, right? Because I wasn't born in 71. He says to me, I was around in 71 when Nixon took us off the gold standard. And I don't think that gold is a good investment because right now it's down. It's down at $1,700 a week, $1,700 an ounce. I said, well, let me ask you something. Do you remember what gold was in 71 when Nixon took us off the gold standard? It was $35 an ounce. All right. So if you were around, sir, when gold was $35 an ounce, and you watched it go from 35 to 40 to 50 to 100 to 200 in the 80s to almost $2,000 now, what's the risk? All right. Secondly, he said to me, like I've just mentioned, he said to me, oh, and right, it was around 2,000 an ounce, but right now it's down at 1,700. This was a few months ago. And I said to him, that's a great observation, but let me ask you a question. See, because when I talk to people about precious metals, when I talk to people about gold and silver, I'm not talking about getting rich, becoming a millionaire in a couple of years like the crypto enthusiasts are purporting. I'm talking about acquiring an asset that's intrinsic in value and holds its value. It's a store of value, so it's real money. Okay, it's real money. It holds its value over time. So I said to him, well, you're saying that gold was around $2,000 an ounce, and right now it's $1,700 an ounce. So you don't want to purchase it. I said, well, let me ask you a question. If you go to the supermarket and last week eggs were $5 a dozen, but today eggs are $3 a dozen, is it a good time or is it a bad time to buy eggs? That's investing 101. I don't care if you're a business that sells a product. The success of that business is based on your ability to keep your cost low, whether that's the cost of your product, the cost of acquiring a customer, the cost of marketing and sales. Your cost must be lower than your return. So if you were around, sir, when Nixon took us off the gold standard and gold was $35 an ounce and has reached as much as 2,000 and right now 1,700, explain to me again why it's a bad investment. See, people will say stuff to sound smart that makes absolutely no sense, which is why it's important for you to know what the heck you're talking about, right? For you to be well versed. Now, like I said, one main advantage of investing in physical gold and silver is its intrinsic value, which can protect against inflation and economic stability. All right. One of the reasons that I love gold and silver is because it's a hedge against inflation. All right. Now, there are some risks. Okay. Owning physical gold and silver can become expensive and inconvenient depending how much of it, how you're storing it. All right. You may need to secure it. Okay. There might be some additional costs like insurance or transportation or whatever. But, the same is true if you have a fine art. Okay. If you got a Warhol or a Picasso in your house, all those things are true. You may have to insure it. Okay. And you may have to secure it. It's not a reason not to get a Warhol or a Picasso if you're able to. All right. Now, as I mentioned before, while cryptocurrencies may offer potential high returns, gold and silver are considered safer and more sustainable investments. Unlike cryptocurrencies, they have a long history. This is gold and silver, has a long history of being used as a store of value and have established market demand. Why have they established market demand? Because like I said, they are industrial. Gold has many, many, many industrial uses. Silver is probably the most industrialized, in my opinion, precious metal. All right. You can't have, if you're watching this, whatever electronic device right now you're watching this on, you could not have that device without silver. Okay. Solar paneling, electric vehicles, so many things, right? Our cell phone, so many things in our marketplace require silver. So in addition to it actually being money, it has a massive industrial use, and because of that, there's a market demand. All right. So, Bitcoin could go up, cryptocurrencies could go up, they could go down, but you can't use it for anything. All right. You can't use it. You can't make cell phones with digital currencies. You can't use, there's no industrial use for it. All right. So gold and silver they've been here for thousands of years. They're on the periodic table. Okay. They've been here since the beginning of time, and they'll be here long after we're gone. All right. Long after we're gone. As I said, they have intrinsic value, whereas cryptocurrencies are solely based on market demand and sentiment. All right. So to wrap it up, while Bitcoin and other cryptocurrencies have brought a new level of innovation to the world of finance, they are still relatively new and have yet to prove themselves as a reliable, sustainable investment. Like I said, they've been around for 15 years, right? Bitcoin first came on the market in 2008. And there's many other kinds of cryptocurrencies, right? So I'm not going to talk about all of them. I'm just talking about Bitcoin because it's the first, it's the one that's most popular, that most people have heard of, and the one that's had most success. But a lot of these exchanges, a lot of these Bitcoin cryptocurrency exchanges have crashed. In fact, in 2022, it was a miserable year for cryptocurrency. All right, many different companies, either fully collapsed or greatly depreciated. Um, and you have the most famous one being FTX. Okay, being FTX. The company was valued at $32 billion. It's gone. Zero. It's worthless. Okay. See, that's something that will never happen with gold and silver. Sure, prices may fluctuate, it may go up and down, but it'll never go to zero. Okay. It will never go to zero. Now, these collapses, they're concerning because, in my opinion, they're Ponzi schemes. Okay. Now, many people are familiar with the term pyramid scheme, right? They'll say, "Oh, that's a pyramid scheme," right? Like, for example, one of my businesses is in the industry of network marketing, and sometimes when I talk to people about the industry of network marketing, they'll say something to me like, "Oh, that's like the multi-level marketing. That's like a pyramid. That's like a pyramid scheme, right?" And I'll ask them, "What's a pyramid scheme?" And they say, "Well, that's when the person at the top makes all the money, and the people at the bottom do all the work and make less money." And I'll say, "Well, that doesn't sound like a pyramid to me. That sounds like a job." Okay, that sounds like your 9 to 5, because that's how a business works. The person at the top makes all the money, the people at the bottom do all the work. But the thing is that throughout the years, pyramid pyramid scheme has been conflated with Ponzi scheme. So let me make this distinction for you. Okay. There's a huge difference between a pyramid scheme and a Ponzi scheme. You see, in a multi-level marketing, network marketing pyramid, you have a tangible product. You pay money, you receive a product. Now, whether that product is valuable, that's based on you and your needs and your desires and your wants. But a Ponzi scheme is completely different. All right. A Ponzi scheme, which is what I think crypto is when you put in money into something, but there is no physical product. You're being told that your money is producing more money. And sure, some people will make money off of that, but there is no physical product. Okay. And so when the company comes crashing down, that's it. Your money is gone and there's nothing. At least if you join a company like Amway, right? And I'm not in Amway. I actually have a healthy disdain for Amway, but I'm not here to bash any particular company. But I'm just using this example, right? If you join a company like Amway and you spend money, you might get cleaning products, you might get something, and so your money is gone, but you got something in return. How useful that thing you got is completely up to you, right? But you got something. But you put your money into a cryptocurrency exchange, you put in $1,000, $3,000, $5,000, and the company goes kaput. Where's your money? Where's that coin that they were mining? It's nowhere. Okay. So again, I would love to know your thoughts because listen, I know a lot of, and I was trying to get one on tonight to come over here and share his insight on crypto. I have a few buddies who are huge crypto enthusiasts, and it's not really an argument or a point of contention. It's simply different strokes for different folks, right? Like I don't like horror movies, but I know people who love horror movies, right? But I don't need to say, hey, horror movies are stupid, or people that watch horror movies are stupid. Listen, if you like it, great. All right. I don't have to yuck your yum or vice versa. But I think it's I think that it's important, whether you agree with someone or disagree with someone, to be able to have civil dialogue where you can learn from each other, and be open-minded to consider the other person's points, right? Like they may say what they have to say, you say what you have to say, and neither of you agree. That's fine, right? Doesn't need to be uncivil, right? Then you don't have to name call, right? No one is this or that because they, subscribe to a certain ideology. Okay. As long as they're not trying to force you to subscribe to their ideology, right? That's where things can get messy. But hopefully I'll be able to get my buddy on in the future and we can dive deeper into this. And again, like I said, I would love to know your comments, love to know your thoughts, where you are on the seesaw. Are you a crypto enthusiast? Are you a gold, silver, precious metal enthusiast? Do you think that they're both good? Do you think that they both suck? Let me know. All right. Let me know in your comments down below. So with that, guys, I'm gonna wrap up this episode of This Week in Money. Definitely enjoyed sharing this topic with you. Join us here next week for another interesting topic when we discuss things in the world of money. There's topics that you want to see me cover on things that are happening now or questions that you have. Please comment down below, and I will definitely get those covered in future episodes. Until then, be amazing. Peace.